Hey everybody, welcome to Trading Capital's Daily Analysis video. I'm your head market analyst here, Curtis Scouten. Jumping into the charts on this December 8th. So today has been a very choppy price action. You can see on the daily chart here, pretty much exactly what we were discussing in our previous two videos is occurring. You're getting the sideways float up, but anything under this trend line is still now considered bearish consolidation. And one of the reasons it's considered bearish consolidation is that you actually pretty much negated this massive green bar impulse move by having a 4-day sell-off. And now you're just consolidating once again underneath this key trend line over here. This was your big 37-day trend, your bear market bounce, what I like to think of it as, and I do believe this is the next turn in the market which we've started. Now tomorrow is a big day because not only is it approaching the end of the week here, but you also get the PPI coming out, and also there's a bunch of options X shenanigans that's taking place. And this is why the market session intraday, if I flip to the intraday bit, has just been up, down, and all around. There's no real conviction. But look at this choppy price action. You're up, you're down, you're up, you're down, you're up, you're down, you're up, you're down, you're up, you're down. And now you're putting inside of this inside bar bearish consolidation on the intraday basis. So just like you are in the intraday, you're also on the daily putting in a short-term bearish consolidation. So maybe the move happens tomorrow where we negate this inside bar bear flag and pop through into resistance, maybe filling this gap all the way at 406. Or the other likelier outcome, in my opinion, is that we start to trend lower. I still have a big support level over here. Since we're consolidating over it, this level is no longer a major support level. I think we'll slice through that pretty quickly here. But the big level that I'm watching is this technical gap fill over here. You do have some secondary or some primary support over here, but I think the big level that the price action needs to get to is basically in between this red bar here and filling that gap fill. And I do think we're going to hit that sooner rather than later. If we take a look at the QQQ, so the QQQ is also putting in some little bit of inside bar bearish consolidation. You can see that you've had your pretty harsh sell-off, and now you're doing a little bit of consolidation all inside of this red bar. So the big question is, can the Qs recapture this first trend line? If they can, then they're likely going to test this second trend line over here. If they get through that, then you also have this major resistance trend line over here, and we'll just have to reassess from this point on. But honestly, in terms of the S&P and the NASDAQ is showing a little bit more bullish price action. Maybe it's because banks and energy has been so weak, which they obviously have a more of effect on the S&P 500. If we take a look at the IWM is a chart that is signaling to me that we're going to see likely downside. Considering that you've pierced this level, and again, you're all inside of this red bar consolidation period here, I think the IWM is looking the most vulnerable, and considering the IWM comprises 2,000 companies, it gives you a better barometer of the overall economy and what stocks are likely going to do. So the underlying breadth of this market is weakening in my opinion. Taking a look at oil yet again had a massive pop on the back of the Keystone pipeline being shut down, but it actually reversed all of those gains. When you have positive news and then it gets reversed completely to make a new low, that is just showing you that the demand for energy is slowly waning, which points to a weakening global economy. There's really nothing else I can say about oil other than the price action is extremely bearish, and it's likely we're heading to the $66 barrel and perhaps a little bit lower, but I will probably be doing a swing long. Best case scenario is if we actually get a straight flush into there. That's kind of what I'm looking for in my expectations on oil. Let's take a look at natural gas. Natural gas did have a little bit of a pop today. Basically, I've been looking to potentially short this one, but it has not filled that key technical gap. The level that I'm actually watching on natural gas, not only hoping that we fill this gap, but I see a little bit of a trend line here and a little bit of a trend line over here. So if we can somehow float all the way back up to this trend line, that would be a great shorting opportunity, or perhaps just letting it pierce through the gap fill and maybe hitting the 50 daily moving average. Let's take a look at gold. Gold's kind of just a muted kind of a pause day. It's slightly up on the session, but still technically holding inside of this red bar underneath the 200-day moving average. Right now, gold is still consolidating. There's really no bias to the downside or to the upside. We just kind of have to wait and see. I'm still hoping that gold has a retrace back down to the 1720 level, where I will look to perhaps accumulate a swing position. If we take a look at the DXY, one of the reasons I'm hesitant on gold is I think the DXY is actually still oversold. I have a big level on the DXY here around 103.84. I'm actually considering going a swing long. If the DXY flushes down to here, this 103, I will be parking some cash in the UUP or the DXY play. With that being said, let's take a look at the US 2-year yield. Nothing really to report on the US 2-year yield. Actually, we'll show you the 20-year yield first. Let's just pull this 20-year yield up. So if we take a look at the 20-year yield, basically you're still at this major support level. Obviously we got a little bit of a bounce today, but you have not been able to recapture this parallel channel. I still have it priced in that yields could surge back up to 4.153 on the long end, and that means the short end would also likely move up pretty decently higher if the long ends also start to uptick. So in terms of the short end, you really still haven't confirmed this technical breakdown, considering that you're teetering on this neckline zone. It's going to be really interesting to see which way yields go, and that's certainly going to be, I think, coming on the back of the fast approaching Fed meeting, the PPI number tomorrow, and then the CPI number as well, I believe is next week or perhaps the week after that. I'll just have to double check. I think it's actually, I believe it's next week on the 15th. So, but in terms of other trade setups, we were pretty active today. We basically started shorting CSX. So if we take a look at CSX is basically confirmed the breakdown of the trend, kind of what we're watching on the S&P 500, except the S&P 500 has not yet got that secondary close below this main trend line. So when you start to see the leading stocks leading the S&P 500, the likelihood of the S&P breaking down eventually is more likely than not, considering that CSX was one of the stocks that actually started rallying before the S&P, and it's important to look for those leading stocks and sectors to give you a little bit of a jump start on the market. But in terms of the CSX, you can see that's basically struggling to recapture this 200 daily moving average, and it's going to be a big level to see if it can recapture this upsloping trend line or get above these downsloping. But lots of resistance in and around this area, and I do think that it's poised to make a sharper move lower with the overall indices. Really, that's about it for today. We can touch base on Bitcoin actually before I take this video off. But Bitcoin, again, you can see that it's trying to break out of this bull flag. It'll be really, really interesting to see if we can get a Pearson close above this wick high. If Bitcoin can, then it's likely going to test this 18.6 level, and I will probably put a stop loss on my Bitcoin position to exit that trade just on a flat basis. That's about it for today's analysis. It is a quick one, so please give this video a big like down below.